Indeed, 2021 we have delivered some quite exceptional results for the company, which we're very proud of. As you say, profits were up 43% year on year, and that was driven by both a very strong increase in revenues, 22% increase in revenues. Costs, of course, are following up, but we have a 58% cost-income ratio, which we've achieved within those results. If I can just point briefly on the revenue composition, I think it's important to acknowledge that all of the revenue categories are very strong in 2021. Obviously, the base fees, the management fees are up 11%. Performance fees are very strong, particularly in Q4, demonstrating the performance of the underpinning funds. Transaction fees were at a record level as well, underpinned by our real estate business, and our JVs representing performance in China as well. So really a strong revenue performance, and of course the flows, 6% flow rate and 48 billion of net flows is all delivering that result. And on your point of the look forward into the outlook, as I look into 2022, markets were exceptionally strong, of course, last year, and we're seeing much more volatility as we come into this year. But I think as we manage a really diversified asset base, we can offer different solutions to clients in this kind of environment, offer solutions that manage the inflationary pressures that we see at the moment. But we're coming from a very strong base with I'd say the roll forward coming from last year into this year, where we have an acceleration on the net inflow benefits coming into this year as well. Yeah, we're positive and constructive on the outlook, but obviously with volatility.
That's fascinating, and we've all sat around this desk talking about the challenge for active management over passive product like ETF. And of course, that's done extraordinarily well at attracting assets, while we've seen headline indices just continue to nudge up through the last 2 years. Do you think we're now entering one of those phases where actually active can finally show passive a clean pair of heels? And what would that potentially mean for performance and management fees?
Yes, absolutely. I think there is room for active and passive solutions, and of course alternatives and real assets in this kind of environment. So certainly across the active portfolio, equity markets can offer solutions in the environment that we have in front of us, and we're starting to see good signals for that in the first part of 2022, but also across multi-asset and different solutions where we've seen strong performance also at the end of last year. So yes, I think there's space for active solutions. Obviously within the fixed income portfolio, the mix between corporates and government offerings that we have is going to vary in this environment. But ETFs can still perform. Exchange traded commodities will also be of interest in terms of opportunities and safe havens, as well as of course looking at the different mix between ETFs in fixed income and equity markets. So really I think the diversification is quite important, and again not forgetting alternatives and real asset solutions, which we think there will be a big opportunity for this year.
Claire, let me also ask this, Annette here also in Frankfurt. Let me ask you about the appetite for ESG product, because it seems especially strong despite the, scandal or irritations you had internally surrounding your former head of ESG. Would you say that this is a prevailing trend also in this year, and will the ESG market professionalize further?
Yes, I think sustainable investing is definitely a very persistent trend. We expect to see more client appetite for sustainable and ESG investing in 2022, as indeed we've seen in 2021. Of course, if we look at our net flow results for last year, we had 19 billion of net inflows into ESG funds. It was 40% of our net inflows. So clients are really speaking. They have a voice on where they want to invest their money, and that's demonstrated in sustainability. We've seen an increasing investment each quarter in Q4 compared to Q2, where we're seeing incremental investments. And again, it's across the portfolio. It's both active and passive investments that our clients are making. So yes, clients are speaking. It's our responsibility to respond to those requirements that they have, and we will continue to deliver more innovative products and solutions. We're going to accelerate the product launches as we come into 2022 to continue to meet that demand.